Joining me now is Mahoney Asset Management CEO Ken Mahoney. Ken, what are your thoughts here on this rotation out of tech in the last several sessions?
Yeah, I mean, that's what happens. We've had rotation inside of tech, and now we're on rotation because people are getting kind of scared. I mean, look, this has been like the perfect storm this week for technology shares. You know, overnight, I think it was Tuesday, South Korean markets down 10%. This morning, not doing much better. Yeah, one thing after another. I mean, yesterday, we started with futures up 600 points, thankfully, to Micron and SanDisk and all the memory. But then other companies like Apple said that memory cost is going to impact us. In fact, for Apple, they're really going to test out the elasticity of demand, like how much can you put up prices before demand wanes. But I think, you know, the biggest part of this perfect storm this week and the wins and has to be, I think, Bank of America, 3 rate hikes. Again, I think they're wrong. I think maybe the Fed will maybe, you know, kind of tap the brakes for a quarter. But that gives pause. If we were to have 3 rate hikes, yeah, multiples is going to contract and value is going to look a lot better than technology. So that's why I think we see the rotation here from tech to value. Understanding, by the way, we don't see that. We don't see, this is not Jerome Powell getting behind in transitory and raising rates 75, 4 hikes in a row. But it does give pause to investors. And I think this kind of rolling out of tech into value started on Monday around the Bank of America's forecast of 3 rate hikes this year.